Consumer prices remaining elevated above the Fed's 2% target, and there's growing concern that inflation could actually tick even higher under President-elect Donald Trump's policies. The president-elect has proposed a 10 to 20% tax on all goods imported into the U.S. and a 60% tariff on all goods coming from China. Economists say that that's likely to create could potentially create a lot of pain here for the average American. Akiko Fujita joining us now in studio with the latest on this. Akiko, it's great to have you here at the table, but what can you tell us?
Yeah, there's a lot of attention focused on all of this because the U.S. is the largest importer of goods in the world. Imports make up more than 15% of the country's GDP. And when you raise the tax on those goods coming in, it raises the cost of goods for American companies and American consumers. So let's start with the baseline numbers. 10 to 20% tariffs on all imports, 60% on Chinese goods. This is what the president-elect has proposed on the campaign trail. The Yale Budget Lab estimates that will raise consumer prices by up to 5.1%. And for the average household in the U.S., that would amount to $7,600 every year based on the share of imports in GDP and the price increments associated with that. Now, we should note the Yale Lab estimate is one of the highest out there because it does take into account the knock-on effects of tariffs. For example, when you tax imports, the goods that compete with them also rise in price. And then you have the issue of retaliatory tariffs. Europeans and the Chinese have vowed to respond with their own import taxes if Trump acts on his campaign promise. And the Peterson Institute says that tax burden will be felt disproportionately by low-income Americans. Now, to understand what kind of price increases we're talking about, we can take a look at everyday goods. And let's take a look at some of the items we're talking about. This is based on calculations from the National Retail Federation. For apparel, an $80 pair of jeans would cost up to $16 more. Toys would face one of the highest increases because existing tariffs are non-negligible. The price of a tricycle, for example, would jump by $18 to $28. And then the price tag for a $650 refrigerator would jump by $200. And sneakers, of course, a lot of people looking at that, you may end up paying $26 more for that. Take a look at this chart here because this pretty much says it all. Chinese tariffs are the most significant because goods coming in from China account for roughly 16% of all U.S. imports. And you see on the left side where current tariffs are, where the prices are. The blue shows you the kind of price increases we're likely to see. Co-chief and investment officer at Bridgewater Associates speaking on this very issue at Yahoo Finance Invest yesterday, saying the impact is going to be a lot more significant this time around compared to the initial Trump tariffs that took effect back in 2016. Take a listen.
It's hard to put real numbers because the biggest thing you don't know is what the second and third order consequences are going to be. In other words, it's not just that we put tariffs on others. They can also put tariffs back on us, and you don't know what that kind of spiral is like. What I will say is the U.S. is less vulnerable to tariffs than other countries. So it does give some sense of sort of who has the incentives to escalate and why the policies are coming from here. But the kind of tariffs Trump is talking about, I think, are, could easily be 50 basis points of inflation, which in the environment we were in 2016 was not a big deal. In the environment we're in today, it's a bigger deal. And it's more likely to kind of hit us into limits of what's possible.
So you heard there, it's not just about the potential tariffs that are being slapped, it's the knock-on effects. But of course, all of this is so speculative right now because we won't know what the actual policy is going to be until January. Is Trump really going to, pull through with that? Or is this all part of a negotiating ploy is I think the question that everybody's asking right now.
And he wasn't super clear on it yesterday, but Neel Kashkari did get asked by our own Jennifer Schomburger about this idea of whether or not the neutral rate needs to be higher because of those inflationary measures. And he suggested that if we do see more inflation, maybe that will be the case. So something we will continue to cover. Thank you so much, Akiko.